Hello and good evening, everyone. I hope today the sound and video is coming completely sync, unlike what happened yesterday. Good evening, Bhavana, Chetan, Deepthi, Saikat. Good evening, everyone. Okay. So, request to click a Zoom session facing confusion in preparation because of notification. Okay. Chetan, we will take this Zoom session. I and Ashok sir, both we are going to take the Zoom session on 14th. So we will discuss all academic. You can discuss with me. Any other thing you can discuss with Ashok sir. So we are going to conduct on 14th. Good evening, sir. I want to start preparation for 2023 and I want to buy this course. How I can I? AK, you can get the contact details from website. You can contact on that number. They will let you know how you can purchase this course. Okay. So before moving forward, I just want to share this thing with you. Uh, Here in your syllabus, this part, social structure of India. This part, social structure of India. Once I am going to complete this part, that is mutual fund, right? After mutual fund, I have to take this part and this part, where I have discussed structure of banking in India. After that, this part is left, right? So these part, this part, and this one, social structure in India, right? So social structure in India, I will take first. Means after mutual fund, I am going to start this social structure part in India. After once I will complete that part, then I will go back to the banking part. Okay, and while discussing this banking part, why? Because uh, I can incorporate all latest current affairs related to this part. And generally this part is going to play a key role in your tier 1, means first stage. It is going to play an important role. So that's why I have decided first I will finish this one, then I'll come to this part, and I will discuss all these things in the detail. It's also going to help you in the part 1. Sir, please also explain the difference between the types of interest risk in the risk management too. Yes, that definitely it will be discussed. Start management YouTube classes. Vikul Bhaiya, for such kind of thing, you should talk to management. Regarding management classes on YouTube, you should talk to management, because I do not have any locus standi ki what content should be on YouTube, what content should be on app. That is prerogative of admin. What I can do, I can just suggest. So I can forward your suggestion, but that is in not my hand. Okay. And this part basically important with respect to the answer writing part. Okay, so here we have to discuss a lot of things: multiculturalism, what is demographic dividend and demographic trend, urbanization and migration, gender related issues. All these things we are going to discuss. Okay, because some people have messaged me and they are asking me ki whether I'm going to take this part or not. They are also saying that ki I'm not able to find these lectures. So I have not taken these lectures yet. I will take these lectures. Okay, so you can follow those lectures. You can give half an hour to 45 minutes to descriptive part. Half an hour to 45 minutes is no harm to give to the descriptive part. Half an hour to 45 minutes, that is completely fine. But not more than that. It should not be something like 2 to 3 hours kind of descriptive. You can just give half hour to 45 minutes for descriptive part. Okay. So once the mutual fund will be over, all this part is related to descriptive. So automatically you are going to get some topics. Don't worry. Right now we can cover FM with our CA part. Inquiry. Am I right, sir? What I write now, we can cover FM with our CA part. And what is QRE? I didn't get that QRE. FMC that FM is always related to current affairs, so it's always integrated, right? So let me finish that one. Once the syllabus, I will try to incorporate all the current affairs related, and I will try to cover some revision part also. I'm planning to do some revision current affairs and quant reasoning and English. Okay. Current affairs, quant. Yes, Karthik. You should go for it. See, right now, what you have to do is you have try to give as much as time. Means whatever the time you have, devote your entire time for something. But don't get exhausted, right? So rather than going for a single stretch kind of the preparation, single stretch means ki I'll wake up in the morning and I'll sit and I'll do study for next 4 to 5 hours. So my suggestion is always, right, ki you can go for 2.5 hour study, then take some break, then again, even if you are going to study 45 minutes and then you are taking break for 10 to 15 minutes and again you are going to sit, it is also very productive way of doing the study. 1 hour session, 1 hour session, 1 hour session. So 45 minutes I am going to study, then I will take the break of 10 to 15 minutes, then I will again start. So this is one way. Another way is ki, okay, in a stretch I will go for 2 to 3 hours, then I will take proper break of half hour to 1 hour, then I will start. Okay, so this in this way. So there are the two ways. So either this way or 1 hour interval or 2 to 3 hour stretch, right? Not more than that, because it is not going to give you any kind of the productive thing. Second thing, in a day, rather than going for too many subjects, right? Try to have 2 subjects at a time, right? 2 subjects at a time, you can go for it. Rather than going for 3 to 4 subjects, it's not going to help you. Industrial report. Okay, I will take it, Chetan. I will take it. घर वाले तो कुछ ना कुछ बोलेंगे ही. अगर वो बोलेंगे तो घर वाले कैसे कहलाएंगे? They have to say something, right? So you must be satisfied with your work. You need not to just try to satisfy others in what we are doing. So I know, for example, sometimes people suggest me ki do in that way, do in this way, do in that way. So until unless the suggestion is open and good, I am going to accept it. But it's not like that ki whosoever is coming on this platform and any platform and they are going to tell me ki no, do in this way, I am going to accept it. Nonsense. I'm not going to accept it. I know that ki what is good for you and I know better than anyone else, right? So I'm not going to accept the request or the kind of suggestion given by any Tom, Dick and Harry, right? If somebody is going to tender his advice, I will listen first. I will try to find it out that key whether it is workable or not, number one, and it is going to be productive or not. So after due consideration, if yes, it is fine, then I'll accept it. It doesn't matter ki parents or somebody else who is having deep knowledge or coming from the Reserve Bank of India or Raghuram Govindarajan is going to call me ki no, you have to teach in that way. So it doesn't mean that because Raghuram Govindarajan is saying that, so I have to accept it. It's not like that. He is master in his own domain and I'm in the master in my domain. So I know better than Raghuram Govindarajan what I have to teach to students who are preparing for the Grade B exam, right? And he is a better person to advise government on the monetary policy related issues. So both are in their own domain, and they are not supposed to overlap their other works. So you need not to consider the request or suggestions for those people who don't know about this field. Okay. Okay then. So as I told you, first I will finish this part. Means first I will after mutual fund I will do this part. Then I will go to the banking wala part. Fine. Now in the last class we was discussing about types of derivative, and from derivative we have to move towards where mutual fund. Actually, we was discussing about swap in the last class. When there was an issue, we was discussing about swap, and there is a two kind of the swap: currency swap and interest rate swap. In the currency swap, generally principal amount plus interest amount, principal amount plus interest amount, both are being swapped. Whereas in the interest rate swap, only interest amount is swapped. Only interest amount will be swapped, and sometimes it is, for example, interest rates. Interest rate are of two type. One is what? One is floating and other is fixed. So floating interest rate and fixed interest rate. Floating interest rate means ki market, the interest rate which is offered by the person who has lent the money to you, that interest rate is going to change as per the market interest rate, right? Whereas in the fixed interest rate, whatever the interest rate was offered at the time of borrowing, that interest rate is going to be remain same during the entire duration of that loan, right? So there are the two options, fixed and floating. Fine. So suppose that uh, A borrowed on fixed interest, right? Fixed interest rate. Why? Because at that time interest rate was low. Interest rate was low, so he borrowed at the fixed interest rate. But his loan duration was somewhere around 10 years, and he borrowed 3 years back. So now in the today's, just trying to make you understand. That's why I'm creating a hypothetical situation. So 3 years back, when he took the loan, the interest rates was very low, right? So he found that ki, okay, I will go for what? I will go for fixed interest rate. So he took the loan at, suppose that he took the loan at the interest rate of 6% 3 years back, and that was fixed interest rate, and that money was lent by M. So M lent that money to A, fine, and A said that ki, I'm okay with what? Fixed interest rate for this 10-year duration, right? So interest rates was low. Right now in the market, interest rate are somewhere around 9%, and that this interest rate is hurting M. Why? If M has went for what? Floating interest rate, then M right now was supposed to get how much? 9%. But right now M is getting only 6% because the deal was done with A at the fixed interest rate. So here A is getting what? Cheap loan, whereas M is feeling heat because there is a problem for him. He is not getting 9% interest. So actually what happened when we will go for fixed interest rate, right? Then there is a kind of possibility of loss for one party, and there is a possibility of profit for another party, right? So there will be extra profit for someone and extra loss for someone. So this extra profit for someone at the cost of extra loss for someone. So what we have to try, we have to hedge this unnecessary profit and unnecessary loss. So in order to hedge unnecessary profit and unnecessary loss, we called it as a hedging. So through hedging, what we will try to minimize the possibility. We try to minimize the possibility of unnecessary loss for someone at the cost of profit of someone else, right? So maybe situation is going to be reversed. A bought this loan. Suppose A bought this loan at the time when the interest rate was very high, but he was in need and interest rate was very high. Suppose it was 10%. 10% was the interest, and A borrowed because at that point of time he was in need. And M offered what? Fixed interest rate of 10%. And A was in deep need, so A took this loan. Right now, market is like that, where the interest rate is how much? Interest rate is 6%. But because A have taken this loan at fixed interest rate, now A is feeling the heat. Whereas in the first case, who is feeling the heat? M. So generally, with fixed and floating interest rate, there will be one person is going to what? One person is going to be on profit side, one person is going to be unnecessary loss side. So in order to hedge the extreme possibilities, in order to hedge out the extreme possibilities, this is why this swapping agreement is generally used. And under the swapping agreement, the floating loan can be changed to the fixed loan, whereas the fixed loan can be swapped with floating loan, right? So floating to fixed, fixed to floating, we can swap it. So that is why it is known as interest rate swap. Okay. Anjali Pal sir, can you share this PDF with us? Sure, I will say. I will. I think I have already shared that PDF. Still, you have not received? Ping me on a Telegram. I will send it to you. See, the entire concept of this derivative. The entire concept of this derivative is what? To hedge out unnecessary risk, right? And if there is a risk, that means what? Risk of getting extreme loss, right? But if you are going to get extreme loss, maybe somebody is going to get extreme profit on because you are going to get some loss, somebody else is going to get that money from you. So there is always a risk in the market. So those people who want to participate in the market, but they do not want extreme kind of uncertainty, right? So for them, the option is created known as derivative, right? Derivative. And over the derivative, another instrument is what? Mutual fund. And in the recent years, from mutual fund, another instrument came in the picture, that is exchange traded funds, ETFs. So where there isn't speculations, anywhere there is a speculations are going on, there is a high speculation of profit, high speculation of loss. If this is the nature of any activity, then in that activity there is always possibility of new instruments will come into the picture. 100 years back, there was a trading, there was a kind of equity and debt war was being sold and purchased, but there was a no derivative. So derivatives came in the pictures 100 years back. Then in last 50 years, we came with the what? Last 50 to 70 years, we came with the idea of what? Mutual fund. In last 8 to 10 years, we came with the idea of what? Exchange traded fund. So every time what happened, every time new kind of instruments will come in the picture. Fine. So let's move towards what? Mutual fund. So if I'll ask you to define mutual fund, how you are going to define in one line? Yes, Suchitra. All the forward contract, right? All the forward contract, or it is future contract, or it is swap. The objective is always what? Hedge out the risk. Hedge out the risk. That's why all these future agreements will happen. Future trading in secondary market. Someone investing on the behalf of us to give us better return on time. Chetan, I didn't say that ki we are going to means whip out the risk. I'm not saying that ki whip out the risk. See, this is the threshold. This is the threshold of risk which I can absorb, right? So if I am going to get this amount of risk, so this amount of risk I cannot bear, right? So I am here and I can bear the risk to this threshold. To this threshold, I can bear the risk. So I need to hedge out this risk. I need to hedge out this risk, right? So similarly, someone should be there who is also in same position. So suppose that there is a possibility of what? There is a possibility of loss and profit. So party A is there. Party A is going to involve in a business, and party A know that ki there is a possibility of what? This kind of the profit. This kind of the profit. And at the same time, there is also possibility of this kind of the loss. Right. So A is going to enter in a business from where he can see that ki I can gain this amount or I can lose this amount. This is the zero where I'm going to start, and this is the possibility of having the profit, this amount of profit. At the same time, the same amount of loss is also possible in this business, right? So either I can take a huge risk for this amount of profit. I can take the huge amount risk. But if I will go for such a risk, there is always possibility of having this amount of what? This amount of loss. So if I am going for this kind of the business, where I am looking for this amount of profit, so at the same time there is a possibility of having this amount of loss. And if I am going to get this amount of loss, I am going to completely bankrupt. Right? I am completely going to be bankrupt. So what I will try to take only that amount of risk which I can absorb. And I know that I can absorb risk to this level only. Right? So similarly, I'm okay if I'm going to get this amount of profit, but I cannot go beyond this of the risk. Right? So I have to hedge out this amount of risk. I am going to hedge out this amount of risk. So when I will try to hedge out this amount of the risk, at the same time, I automatically going to lose this extraordinary profit. So this is called, we called a hedging. I just want to myself in this spectrum. I just want to be in this spectrum. I don't want to move beyond this spectrum, because if I will move beyond this spectrum, above is fine. But if I will go beyond that, then it is going to be a grave loss situation for me, and maybe I'm not able to recover overall. So this is why the concept of hedging will work. And hedging doesn't mean that there will be the zero risk. Risk will be there, but that risk can be absorbed. Right? That risk can be absorbed. It is just like an investment with varying interest. Okay. Bhavana is saying pool of money invested. So see, pool of money can be invested with whom? Pool of money can be invested by one I1 to IN. These kind of the investor, they can pool their money and they can invest in the stock market. They can pool their money and they can invest their money in the stock market. Why you need mutual fund? Sir, I need some guidance in the course. Ping me on this Telegram channel of our Telegram channel. I'll see when I can discuss. So why we need means in the even in the stock market, 4-5 brokers or the 4-5 investors, they can pool their money and they can jointly put their money in the stock market. Then what is the need to be a mutual fund? What is the main USP of a mutual fund? Mediators are also there in the market, means in stock exchange. Stock exchange, there are the brokers and even you can hire portfolio manager. Pool the money and hire the portfolio manager. See, there are two USPs of mutual fund. One is very simple funda. What you all of you are saying that A is having 100 rupees to invest, right? So, but from A1 to AN, from A1 to AN, N is equal to how much? N is equal to 100 means there are the 100 people, right? So, if there are 100 people, total investment value is going to be how much? 10,000, right? So suppose that if I am going to deposit how much? If I am going to deposit this money in the bank and I am going to get how much? I am going to get 4% interest, that is going to be 4 rupees. But if from A to AN people, they are investing 10,000 rupees at the interest rate of 4%, they can pool how much? They can generate at the interest rate of 400 rupees interest they can generate, right? So here the interest how much generated? 400. So it is possible to invest that money further, means when you will go for further, from you are going from 100 to 104, from 104 to reach 400, it is going to take too much time. But for here, if you are going to pool your money, then it is easier to go for higher multiplier value in short span of time. So the reason why we want to pool, the reason is pool is what if we will pool the money and we are going to invest or jointly going to invest, then it is little bit easier to multiply our wealth in short span of time rather than if we are going to invest as a single investor. So this is why people are ready to what? People are ready to pool. But question is कि from A1 to AN, everyone say that ki I am well capable, I am well capable, and they are having a doubt on the capability of other, right? So it is better to hire what? A market expert. Better to hire a market expert, and that market expert should not be like these people. He should be completely what? Professional. Professional means what? His work is only to invest the money of others, not what? Not being as an investor himself. He is having the expertise of only putting the money in the market. Third thing, third thing, whatever the money is going to be pooled by these people, that should be looked over by an independent person, or you can say trust. So what amount you have pooled, the amount you have pooled, it should not be control of either these people, it should not be complete control of these people. It there should be a particular trust, and this trust is going to look over all the activities of what? All the activities of that market expert, how he is spending that money, what are the desired results are we are expecting, and what is happening. So there will be a separate organization. Means once we want to do our investment in more and more professional way, and we want each and every step of investment must be under a market expert, must be under a market expert, then it is better to go for mutual fund kind of the system. Generally, when as an individual investor I am going to invest my money, so I am relying on my wisdom, or I am relying on the wisdom of broker, right? So I am relying on my wisdom, and I am relying on the wisdom of whom? Wisdom of broker. But in the mutual fund system, first of all, because there are many people, so it is a possibility to pool huge amount of fund, so that the multiplication of wealth is going to be in a short span of time in comparison to investment made by the single person. Number one. Number two, what I explained in two steps regarding independent trust and market expert assets management company, right? Asset management company, right? So here, what is the intention? Intention is that we want to perform each and every step of what? Investment with more professional and people who have expertise. So this is why the concept of mutual fund came into the picture. Yes, Vrishali, obviously he is going to take his commission. He is going to take his commission. And see, even if he is going to take commission, but because the multiplier value is very high, multiplier value is very high when the investment is going to be pooled, the multiplier value is very high. So you are not supposed to pay too much. You are not supposed to pay too much of your profit. If he is working only for you, right? So suppose that there is a fixed fees of 50,000 rupees on monthly basis. There is a consultant portfolio manager, and he is saying that ki, I will take 50,000 rupees from you, right? I cannot work below 50,000. So single person is paying 50,000, right? So that single person must have the good wealth, means he must have 50 lakh rupees or 70 lakh rupees or 1 crore rupees to invest, so that that 50,000 rupees is not going to hurt his income. But if that 50,000 have to be paid by a person who himself have only 1 or 2 lakh rupees asset to invest in the market, he is not able to afford. And if you are not able to afford, you have to rely on the people's wisdom rather than their professional skill. So when you will pool your money, it is easier to hire the market experts which are available at very high cost, which cannot be afforded by the common man. If you are Ambani, if you are a Tata, or even if you are having the wealth of what investment value, you have money which you can invest in the market, that is somewhere around 2 crores or 5 crore or above, you can hire a portfolio manager, right? So that is not going to hurt you, right? But if you have investment value of 1 lakh, 2 lakh, or 5 lakh, then it is going to completely disturb your wealth, because he is charging somewhere around 6 lakh rupees on annual basis, right? Ayush last class was abandoned because it was hardly went for, I think, 5 to 10 minutes, because there was a synchronization issue between voice and video. So ultimately, after making too much effort, we have stopped that class. So I don't think there will be any kind of video. And if there, kindly ignore it. And I'll ask Ashokji to remove that video, because unnecessary it will create a problem. अरे मिश्रा जी, कितनी बार क्वेश्चन पूछोगे कि क्वेश्चन टाइप करके कॉपी पेस्ट कर रहे हो? बोल तो दिया. Okay, got your answer. Yesterday's class was having an issue. So you got the idea ki why mutual funds are relatively better than investing in what? Than investing as an individual. It is always better to invest in the pool. So as we know that in India from 1947 to 1992, till then liberalization, privatization and globalization started. Nature of the market, the activity in the capital market and money market was only restricted one. It was highly restricted, right? However, fortunately, the story of mutual fund in India, mutual fund in India was started in 1963 with formation of Unit Trust of India, and this Unit Trust of India in 1964 they launched US 64 mutual fund. Yes, obviously, many times people will do that thing. That is quite common in the capital market, right? But for that, there should be very good understanding among all those people, right? Because there is always, if 4 or 5 people are going to do something, right? If 4 people are there, right? Or कितने हो गए? 8, right? Even if there is a group of 3, a group of 5, or group of 8, there is always a tendency of being a alpha male, female. If is a group of male or female, right, means a human being, right? So there is always a tendency of some people being what? Alpha male means I am the group leader and I know better than anyone else. So in that way, if he is going to dominate, and he is going to take certain decision, and market is always what? Always based on speculation. So initially maybe other partners are going to agree with him, but in case of the loss, then there will be fight. So generally it is possible you can pool, but generally for money people do not trust even on their father. So forget about the partners. When you are going to invest money which is not in your control and it is going to be controlled on the market situation, so there is always a big problem, right? So generally people will go for it, but at very small level. Suppose they are going to pool their money and they are going to invest 5,000, 10,000, 20,000, or lakh, 2 lakh, 5 lakh, not beyond that. So it is not going to be like they are going to invest combinedly their money like 40 lakhs, right? So at this level, generally this concept do not exist, because there is a high chances of what, conflict among all those partners, right? When the high amount of money is involved, there is always a chance of having what, conflict among the partners. So this is why. Market means risk, so obviously group means risk also. See, when we talk about the market, when we talk about the market or market related any instrument, please have this thing in your mind. There is always a prefix when you will enter in the market. There is always a prefix is risk, right? So risk is always involved, and being as an investor, it is up to us कि we want to minimize the risk or we are able to go for higher risk value. That depends upon our ability to absorb the risk. Okay, now, so what I was saying that कि in 1964 unit Trust of India has launched scheme US 64, and basically it is government sponsored scheme, right? It is government sponsored scheme. So why in 1964 there was a need to have such kind of the thing? That was a phase when India was having an acute shortage of capital, not only at private level, but government was also facing shortage of funds. Number one. Number two, this was an era banks are under private ownership. Banks are under private ownership. Nationalization of bank was started in 1969. So banks fund are not under the control, direct control or indirect control of the government, or right. And government need funds for especially to push their plan of public sector companies, right? Government has started establishing the steel plant, cement plant. Lot of industrial activity was started, and for that government need funds, right? And banks credit is not available to the government at cheap interest rate because banks were under private ownership, right? So this was a time when government feel that why we should not start the mutual fund kind of thing. And in this mutual fund, it is going to be sponsored by the government company, and people can purchase that mutual fund. So people's money can be pooled, and that pooled money can be used for investment in what? Investment in various public sector companies. And when those are going to make the profit, we will share the benefits with the people, right? So this was the reason. I will come to Axis Bank. Wait. I will come to the Axis Bank point. So in that way, Unit Trust of India has started their business, and government actually got very huge response when Unit 64 scheme was launched. When this Unit 64 scheme was launched, it got huge response because people see that it is being sponsored by whom? Government of India. That means government itself trusted, right? So the name of the government can be trusted. Even there is a possibility of loss, government is going to try to provide some kind of cushion, right? So this is why this US 64 scheme got huge response. Despite having a huge response, government didn't went ahead, and government did not allow private sector to start mutual fund business, right? Even banks like SBI at that point of time, means in 1964, that bank was under government and RBI's ownership at that point of time. Still, government didn't allow SBI to go for having a separate mutual fund scheme, right? So government was having a very narrow kind of approach towards the mutual. That was only because we do not have any other option. That's why government has started this thing. This thing, what? The Unit Trust of India, and Unit Trust of India have kind of monopoly monopoly in mutual fund business. This mutual fund monopoly business was broken in 1990s when we went for liberalization, privatization, and globalization. So under that, the monopoly was broken. So from 1964 till then, 1991. From 1964 to 1991, almost 30 years, that is having the experience of 27 years of doing this activity through what? UTI has opened their branches in all part of India. They have branches, and through those branches, they are running their mutual fund business, right? Gradually, they also started doing other non-banking activities like providing loans, small schemes, such kind of the activities they are already doing. In 1992, in 1992, when RBI opened a private banking license again, because in 1969, when government went for first time nationalization, through act, government has prohibited RBI to issue license for the private sector. However, after liberalization, privatization, and globalization scheme, RBI has started the process of giving banking license to private company. And in order to provide banking license, RBI has invited various companies who are doing their financial businesses in India, right? So they can apply for banking, what? They can apply for banking license. So under that, UTI also applied for a banking license, and RBI has granted them a banking license. Now this UTI have two businesses. One is the business of mutual fund, and other is the business of bank. So one was UTI Bank, and other was UTI Mutual Fund. So once UTI got this banking license, and they are also running their mutual fund business, so all those banks who are interested to enter in the mutual fund market, they also started pressurizing RBI ki if you can give a license to a mutual fund company to run a separate bank, then why you are not allowing us to run a mutual fund? We are already a banking company, please allow us so that we can start a separate business of mutual fund, right? So by that virtue, many of banks got the license from the RBI or the permission from the RBI to run their mutual fund, right? So this is all about the history of UTI and mutual funds in India. Later on, UTI, because it was an independent company. It was an independent company, and through their own paid up capital, UTI, through their own paid up capital, they have established the UTI Bank, and later they sold their paid up, means shareholdings, paid up shares to other private entities. So technically, UTI Bank have private plus minority government holding. Later on, this private who have majority shareholding, they sold their shares to Axis Group, and that's why the name was changed from UTI Bank to Axis Bank. But you know the irony, even from the inception of UTI Bank and even the mutual fund, they are independent company. They do not have any involvement, direct involvement of the government, or they are not government employees. They are not government employees. Still, 99% population who know UTI Bank, they feel that UTI Bank is a government bank. And I have started my first job in the UTI Bank only. Right. So just kind of what doing the graduation those years. So they said that okay, you can go for it. You can go for some credit. You can convince people for this scheme. So that was what summer holidays was going on. So I said, "Okay, fine. I'm good in that. I can do that thing." Right. So I did that work for 2.5 months in the UTI Bank. And when people in my family heard that ki I'm working in a bank and that is UTI Bank, so people have this perception ki I got a government job. I got a government job because there was a kind of trust in the people ki UTI Bank is what? UTI Bank is a government bank because UTI itself is a government company. Right. So this is what happens when government is going to start or sponsor something. Then people have this perception ki it is what it is. Even for LIC, LIC is a government do have shareholdings. Majority shareholding is held by the government. Right. That's true. But LIC have their own way of doing business, and they are going to do their business on their own. And if LIC is going to occur a huge loss, right, then it is complete responsibility of LIC only, not the responsibility of government, because government is just a shareholder, right? Government is not involved in the day-to-day functioning of the LIC, right? So if LIC, अभी क्या हुआ इसमें? Where to message? So audio and video is available right now because there was some glitch in between. Okay. Okay then. Okay. So where was we? So okay. Now just see how mutual fund work. Right. So in the mutual fund, there is a sponsor, transfer agent, the mutual fund, custodian, trustee, and AMC, and unit holder and SEBI. This is the structure I just downloaded from one website. I don't know what was the website, but I feel this structure is easier and better to make you understand. Right. So unit holder, sponsor, transfer agent, AMC, trustee, the name of the mutual fund, and the custodian. Right. So is it? I think the image is not very clear, but I hope it is okay. You are able to read what is written here. On the top, it is written unit holder, then sponsor, transfer agent, AMC, trustee, mutual fund. एक बार साइज थोड़ा सा कम कर देते हैं. Are you able to see it now? Okay now. So this is the structure of a mutual fund. So suppose that there is an example of SBI. Just take an example of what? SBI mutual fund. So if there is a SBI mutual fund, then in this structure of mutual fund, there is a company known as SBI mutual fund. And this is the general structure of any mutual fund. So I have a question for you. What role is going to be played by SBI in this structure if it is a structure of SBI mutual fund. If it is a structure of SBI mutual fund, then in that structure, what role is going to be played by SBI? Answer my question. As a sponsor. Okay. Then who will be the custodian? If SBI is going to be the sponsor here, then who will play the role of custodian? If SBI is going to be sponsor, chalo, I agree. Sponsor is SBI. Then who is going to supposed to play the role of AMC? Who is going to play the role of trustee? And who is going to play the role of custodian? Customer. Customer is going to be the unit holder. Customer is here. Question is, who first tell me who is going to play the role of what? Who is going to play the role of trustee? Who is going to play the role of trustee? Answer. Answer please. Who is going to play the role of trustee? See, the point is, so mutual fund can be formed under Indian Trust Act, right? So whosoever is going to be a sponsor, right? Whosoever is going to sponsor, for example, in this case, SBI is going to be a sponsor. So SBI have to create a trust. That trust created by SBI under Indian Trust Act. So whatever the law says, Indian Trust Act, whatever the terms and conditions are there, SBI have to fulfill all those terms and conditions. Means SBI have to announce who is the trustee and who are the other members of the trust board, or SBI have to do all those, fulfill all those things which is mentioned in the Indian Trust Act. So as per the Indian Trust Act, you have to first establish a trust, right? So SBI is going to establish, suppose that SBI ABC Trust. So this trust is created by whom? This trust is created by whom? SBI. Right. Now SBI have to go for what? Custodian. Right. I told you when I was explaining you the market, capital market, I told you the concept of depository. So since the electronic trading started, the depositories are being there who are going to deposit equities, shares, debt in electronic form. In the electronic form, you are going to hold all these things and they are known as depository. And there are two depository, NSDL and CDSL. Central Depository and Securities Limited, National Securities and Depository Limited. So these are the two depositories. Before the depositories, this role was placed by custodian, and these custodian, rather than in electronic form, they hold those securities in physical form. So since the inception of depositories, the role of custodian to hold the securities in the physical form was stopped, right? So I told you at that time also कि custodian still they are relevant, though their role was taken by the depositories like NSDL and CDSL. Their role was taken by whom? Their role was taken by depositories in the stock market operation. But these custodian are still relevant because they have a custody of mutual funds, and when the trade is going to be happen in gold or gold related other instruments, so custodian will play the role, right? What it means that ki when a mutual fund is going to be established, mutual fund is going to invest money either in equity or in debt or in both. When mutual fund is going to pool the money, mutual fund will pool the money, and after pooling that money, mutual fund is going to what? Invest that money in securities. That securities may be only equities, only debt, or mix of both debt and equity, right? So once you are going to invest that money, and against that investments you are going to get some securities, so those securities are going to be held by whom? Custodian, right? So custodian will be there, and that custodian is going to what? That custodian is going to hold those securities. Fine. So the role of custodian is what is the role of custodian? The role of custodian is to hold those securities which are being taken by mutual fund, right? And who is going to do this thing? Custodian is the holder of the actual investments. Holder of actual investment means, suppose that how much pooled? 100 crore was pooled by the mutual fund. So of 100 crore rupees, that mutual fund have purchased 10 lakh shares. So these 10 lakh shares are going to be held by whom? That 10 lakh shares is going to be held by custodian. Fine. So custodian is going to hold. And who will suggest कि this, with this 100 crore, let's purchase 10 lakh shares of company O. 10 lakh shares of company O. Who is going to give this suggestion? This suggestion is going to given by AMC, Assets Management Company. Assets Management Company. So Sir, Telegram group is private group where no contact regarding doubt for the courses. I have received a Telegram link in the course, but it is not working. Suchitra, please contact to whom? Admin, because I am not supposed to, I do not have an idea on all those issues. Please try to understand. Just a teacher. I am not a unit holder of this institution. Right. I am just a teacher and I am only responsible for what? I am only responsible for teaching related issues. If you have any issue regarding uh, this finance part or banking part or whatever, then please ask me. Otherwise, I do not know ki what how to answer, means what to answer. If Telegram link is not working, I can't do anything. What maximum I can do, I will suggest. I think I have shared that contact details or not. These are the two numbers. Please contact any of these two number or drop a mail to info@crackgradeb.com to get your other queries related to the course and how to go for this Telegram group and all. Okay. So So all the investments, whether it is bond or equities, they are going to be held by whom? Custodian, right? Then the mutual fund means the name of the mutual fund. What they mean to say it, the mutual fund, the name of the mutual fund. For example, the SBI mutual fund. There will be the trustee, right? The trustee is going to be established by the SBI under the Indian Trustee Trust Act. And who is the sponsor here? Sponsor is SBI. Now, what kind of the mutual fund we should invest? we should not go with the name of SBI. For example, when SBI started the mutual fund business, lot of people with over enthusiasm they invested their money in the SBI mutual fund. I told them ki don't go by the name. SBI is not a name important here in the mutual fund. Who is sponsoring that fund, that mutual fund, is not very important. The most important factor when you are going to invest in the mutual fund, the most important factor is ki who is asset manager, who is going to manage those assets, right? So there are some banks, there are some organizations who are having expertise in that. Even days before, means when I was teaching you about this RBI, I told you ki generally uh, some hiring from IIMs and IIT, and that hiring are going to fetch one of the highest package, like 1 crore package, 2 crore package, or 4 crore package. So such packages are offered by either a very big tech giant, or that is going to be provided by whom? Investments bank. So those investment banks are generally running the business of what? Assets management company, right? So they hire extraordinary intelligent people, intelligent in the sense of smart people, and they have very good knowledge of how to analyze the thing, the good knowledge of how to analyze the thing. And on the basis of analysis, let's take the new step, next step, right? So, and that work cannot be done by machines, right? Because machine can do only what? The calculations, right? So machines cannot actually understand the human sentiment, right? Machines cannot understand the human sentiments, and sometimes decision taken by the company or board or even a country, that also involves a sentiment, right? Also involve the sentiment. For example, what is happening right now in the Pakistan, both opposition and the government, they know that ki the situation is right now, we have to face the election. So both parties are trying to gain the sympathy of what? Sympathy of public, so that they can be re-elected, right? So the rationale of doing the right course of action is not important here. The important is to gain the sympathy of the people of Pakistan in order to get elected or in order to get re-elected. So similarly, sometimes companies also, they take some decisions which you think that ki for short term it is a right decision, but maybe they are thinking in the longer run. So this is why this function is not possible from the supercomputers. Supercomputers can be used for the calculations, but where to invest, how much to invest, and when we have to withdraw, all these decisions should be taken by whom? Humans only. Why I'm telling you? Because in 2010 to 2014, in that phase there was a lot of buzz. Rather than humans are going to take this decision where to invest, how to invest, it should be replaced by artificial intelligence. So there was a try, but that try was miserably failed. So that's why now it is again under complete control of what? Humans. And these humans are the part of big firms like Franklin Templeton Fund. So Franklin Templeton Fund, so this is the company who have an expertise of more than 150 years to invest in what? Invest in such kind of the business, right? So they was doing those business independently earlier. Now they are doing this work for the mutual fund, their trust and a sponsor. So who is going to be what? AMC. SBI is going to give this role to whom? It is very important. It is not important that SBI is running the business, right? It is important that SBI is going to do this job to whom? So obviously, if there is a very good assets management company, there is a very good asset management company, they are going to charge higher commission. They are going to charge higher commission. So to whom we have to hire, that is going to be decided by whom? Sponsor. So if a sponsor feel that ki no yaar, they are not good, that company is going to be better, or that company is going to be better, so it is going to completely change the complexion of possibility of profit and loss, right? So whenever we suggest, means you have to go for investment, first see who is the AMC in that kind of business. Fine. So I have explained you the role of what? Assets management company. I have explained you the role of trust, custodian, sponsor. Who is the transfer agent? Transfer agent can be merchant bank, and that merchant bank is going to be responsible for whatever the amount they have received from whom? The amount they have received from the unit holders, right? Unit holders, and that unit holders money is going to transfer to whom? To assets management company, and whatever the equities has been purchased, that is going to be transferred to the custodian. So all this give and take work is going to be taken by whom? Transfer agent. And when all these activities is done by bank specifically, so bank already have a huge human resource. So for bank it is quite easier to factor that human resource and to adjust all those things without having an extra cost. Whereas if kind of means if there is a dedicated mutual fund company, so they are doing that business only and they must have to hire all those things, right? So sometimes people feel that ki what I am going to invest in SBI is going to be more fruitful because the costing part, right? The costing part is going to be less for SBI and it is going to be higher for other private companies. This is one of the logic why people feel that key it is better to invest in SBI, but generally you must see who is the AMC and accordingly go for the investments. Okay, so I hope all these positions are clear. If it is clear, then I will let you know ki what is net assets value and how it is being calculated. Sir, SBI itself transfer agent in this. Yes, yes. This is why means SBI is going to maybe SBI. There is a possibility of the cost part is going to be less when you are going to invest in the SBI mutual fund. No, see, just give me a minute. In this diagram, the role played by whom? In this diagram, the role played by or maximum sponsor's role and transfer agent's role that can be played by a single entity, that is SBI, right? However, trustee, that should be a separate organization. SBI itself is it's not possible. SBI have to establish a trust, separate trust, and hire people who are working as a trustee only, right? So that should be the separate entity. Custodian should be separate. These two roles can be played by whom? That two roles can be played by a single organization. But trustee, AMC, that should be these three roles should be played by different people. It is not possible कि the same person is a custodian and same person. In fact, this is impossible कि custodian is also an AMC. It is not possible because you know that who is here. SEBI. SEBI is also here. So SEBI is here and SEBI people are very watchful on all those things ki what you are doing. They are watching you. And if you are not going to fulfill all the terms and conditions which is put forward by the SEBI, you are not being allowed to do your function as a mutual fund. And sir, where those agents stand in this? They, there is no permanent position to stand. Means whenever they have to collect, transfer agents have to go to where? Unit holder. So they are standing here. They are standing here in order to collect the money. After collect the money, they are going to go where? They are going to the mutual fund, right? In the mutual fund, they have to go to the trust and inform that they have received the money. They have received the money and they have to transfer this money to whom? Trustee. And trustee, that money should be transferred to whom? Assets management company. So they have to be here. And once the AMC is going to invest that money and they are going to purchase those security, then this transfer agent is going to whom? Custodian, and transfer all those securities to whom? Custodian. Custodian is going to hold. Fine. And when at the time of maturity, then that security should be what? That security should is mature, and that custodian is going to give that security to transfer agent, and transfer agent is going to give that securities to whom? From where you have purchased the equities and shares, right? So you again going to get the money, and that money is going to give him whom? Mutual fund. So all these things are going to be worked through whom? Transfer. So it's like a peon in the government department, right? Who is going to move the file from one desk to other desk. So they are going to play this kind of the role, like the role played by the peon in the any organization, moving the files from here and there, right? Clear? Okay. The next point we have to understand is net assets value. So there are multiple investors from A to AN. There are many investors, right? So there are many investors, and all of them they are going to invest what? They are going to invest their money, right? Maybe equal amount or the different amount. Both possibilities there. So suppose that they combinedly invested how much? They combinedly invested 100 crores, right? So 100 crores they have combinedly invested from A1 to AN. Fine. And that 100 crore is going to be divided into this 100 crore rupees is going to be divided into, suppose, one thousand crore units, right? 1000 crore unit, right? So 1000 crore unit will be there. So how much money is pooled? Money is pooled, that is 100 crore. And through 100 crore, we have created how many units? 1000 crore units we have created. Now we are going to distribute this unit according to how much money who has invested. Suppose there was only two, A and B was two investors, right? A has invested how much? A has invested 2000, or just take a proper example. Just give me a second. I'll share that image. Is it visible properly? visible properly? So here you can see that assume that there are the two investors A and B who have invested in the mutual fund of X company limited, and X company limited fixed mutual fund is unit of 1 rupee. To make the issue of such mutual fund, the invest A invest how much? 1000, and B invest how much? 2000. A invested how much? 1000, and B invested 2000. The total corpus of the mutual fund will be 1000 plus 2000, that is total 3000 rupees investment was being there. A will get 1000 unit. Why A will get 1000 unit? Because each and every unit is of how much? 1 rupee unit. And how much A has invested? 1000. So you have invested how much? 1000 rupees. And what is the cost of 1 unit? 1 unit is equal to 1 rupees. And how much you have invested? You have invested 1000. So you are going to get how much? 1000 units. Fine. So your investment value is 1000 unit. And whereas B, how much he has invested? B has invested 2000. So his investment value is how much? 2000. Right. So means in what proportion you are going to invest, in the same proportion you are going to get higher or less number of unit. Don't go this right now. Do not focus on the net assets value. We will take it later. Just try to understand what unit means and how it works. So unit is a kind of what? Unit is a kind of our intensity of investment. It is going to show the our intensity of the investment, means how much or how less we have invested. If I have higher number of unit than you, that means I have invested more money than you, right? So in this way they defined what? They defined how much unit can be there. Suppose that in case of 1 rupee it was of 2 rupees. If it was of how much? If it was rather than 1 rupee, 1 unit will be of 2 rupees. If 1 unit will be of 2 rupees, then A is going to have how much? A is going to have 500 units, and B is going to have how much? 1000 units, because 1 unit cost 2 rupees. Fine. So in this way, we will define how much unit you are going to have. So once we have decided how much unit we do have, so accordingly I am going to hold those units. Now total money they have put it here is how much? 3000 rupees they have put. So that 3000 rupees is going to be finally in the hand of assets management company, and that assets management company which got this 3000 rupees, they have invested in capital or money market. If they are going to focus on capital market, so generally there is a tendency, or generally they invest only in the capital market. Why? Because capital market is a market of long term securities, and mutual fund is a kind of investment which generally, in general, means when the mutual fund business was started, actually it was for long term investment purposes, right? So it was meant for long term investment purposes. So initially when mutual fund came into the picture, they was investing only in what? Capital market, because capital market is in general a market of long term securities. Fine. But gradually they also started investing in the money market, and those mutual funds who invest in the money market, they are known as money market mutual funds, and they are going to invest in the various instruments which are available in the money market. We already discussed, right? Money market mutual fund, they can invest in T-bills, treasury bills, right? They can invest in certificate of deposit, they can invest in various kind of the commercial papers. So all these investments, they are going to be made by whom? money market mutual funds. So who are the money market mutual fund? Those mutual funds who are dedicated their investments in money market only, they are known as money market mutual fund. So this AMC have option to go for what? Either capital market or money market. And when they went with this value of how much? 3000. So with this 3000 value, they went to the money market and capital market, and they are able to fetch how much? From here, they are able to fetch what they have given, 9000. So 9000 rupees they have created, investing how much? 3000, and finally, how much you are going to generate? You have generated 9000, very optimistic figure, but anyhow, because we have to understand, that's why we are taking it as a literal. Okay, we have invested 3000 and we are going to get how much? 9000, right? Now the asset we have created how much? 9000. But as you can see, in this, lot of people were involved, right? Lot of people were involved: trustee, mutual custodian, transfer agent, sponsor, AMC. So having all those people, that means some cost will be there, some cost will be there to all these expenditures. So these costs are going to be shown here in the form of what? These costs are going to be shown here in the form of debts, in the form of debts. And they have assumed this debt as how much? 1000 rupees. Why they are calling as a debt? They are calling as a debt because initially that money is going to be spent by the sponsor. So initially this is the sponsor. So the fees of assets management company, the fees of transfer agent, or the fees of custodian, so all these fees initially is going to be paid by whom? Initially it is going to be paid by whom? Sponsor. And that sponsor is going to consider it as a cost part, and that cost part he has funded. So he is considering that money as a debt given by sponsor to trustee. Sponsor is going to spend all the money which is required to run a business, right? But what sponsor, whatever he is going to spend, he is considering what? He is considering in the form of loan they have given to trust. So whatever the trust is going to have an asset, to create that asset, all the functioning was going on, and for the functioning of entire mutual fund, the sponsor has sponsored with the debt, right? So now how much we have created? We have created the asset of 9000. So the asset value is how much? Asset value is 9000, and they have assumed the cost is how much? 1000 minus 1000. So that is going to be how much? 8000, right? 8000 is a profit. Now we have to distribute to whom? We have to distribute to the unit holders. The profit, this profit, 8000 profit, have to be distributed, right? So we have to find the value that is known as net assets value. So first they calculated the amount after debt, that came to how much? That came to 8000. Then it is being divided by number of outstanding unit. How much outstanding unit? If we will go by this calculation, 1 unit is equal to 1 rupee. 1 unit is equal to 1 rupee. Then total unit of A was 1000 unit and 2000 unit of B. So total number of units were 3000. So 8000 divided by 3000, and then you are going to get the net asset value of how much? Net asset value 2.67. 2.67 and multiplied by 1000 unit, that is going to be the given to person A, and 5340 is going to be given to B, right? So in this way you will find the net assets value. Net asset value will be calculated. I hope this point is clear. because this cost was beared by the sponsor bank. Bank was a sponsor, and that sponsor bank has given that money to whom? That SBI trust which was created, right? So that money was given by a bank to trust. So if bank is going to give some money to a trust, in the bank balance sheet, it is going to be considered as a debt. Whenever bank will sponsor, so bank is sponsoring, but whatever the money is going to be given by a bank, it must be mentioned in the balance sheets now. So what with what name you are going to mention? You cannot mention it as an expenditure. Why? Because you are going to create some asset, right? So bank want to create some wealth. So for wealth purpose, they have given loan to what? This unit, this mutual fund. So bank is a different entity, and he is a sponsoring. So sponsor bank is going to give loan to mutual fund so that mutual fund can run their business. So, in other words, you can say that the SBI trust has borrowed money from SBI bank in order to run their business. What business? To hire a custodian, to hire an assets management company, to hire a transfer agent. For all these purpose, a trust need money, and that trust is going to get money from the sponsor bank, and a sponsor bank is going to give in the form of loan. So that's why the term debt is used. I don't know what is NPV and IIR. Now my mind is not being there. I am not able to recall. Please let me know what do you mean by NPV? Please tell me what is NPV and IRR. So in this way it is calculated. Suppose that was this 9,000 value, this 9,000 value we have invested, means A and B has invested this money. A and B has invested this money last year. Okay, they have invested this money on what date? 1st April 2021. Right. On 1st April 2022, they have calculated this value. So how this 9,000 came? How this 9,000 came? So actually the 3,000 unit, there was a 3,000 unit, right? Total unit was 3,000. So with this 3,000 unit, AMC, Assets Management Company, they purchased the share, right? They purchased the share by of company, any company, they have purchased the share, and within a year value was tripled. So they have purchased the share of a company. Suppose uh, ZX company was there, and they have AMC has purchased ZX company's share, right? The 3,000 unit, right? And the money they got is what? Assets management company got 3,000 rupees, and this 3,000 rupees they have purchased the shares of ZX company, and that ZX company share at 1st April 2021 they was having the value of 3,000, right? Each share each share each share was having the price of 1 rupee, right? 1 rupee share, so they have invested 3,000, right? But after 1 year, on 1st April 2022, the value of each share has increased to 3 rupees. It is increased to 3 rupees. That's why you have found it ki how much profit? 9,000, right? But actually this mutual fund is going to mature on 1st April 2023. So this 1st April 2023 is a mutual fund's maturity date. So finally we are going to get accordingly what will be the value of shares of this ZX company on 1st April 2023. Suppose that by that time, if the value of the share is going to be 6, or maybe it is going to be zero point 0.5 paise, means 0.50 paisa. So the amount of profit and loss can be calculated even on daily basis. Means if suppose tomorrow the value of this share on 1st April, the value of 1st April 2022, value of share, here the value of share was 1 rupees. On 1st April 2022, it went to 3 rupees. On 2nd April, it went to how much? 2 rupees. So accordingly, on daily basis, net assets value will be calculated, and at the time of maturity, what will be the value you are going to get it accordingly, your profit or whatever the loss. So there is both possibility of profit as well as the profit possibility of loss. So accordingly, there are the two kind of the mutual fund scheme. One is open ended, means what, you can put your money in the mutual fund, and whenever you want to withdraw, you can withdraw. Suppose on 1st of April 2022, I found that 3 is a maximum possible value of that ZX company share. Beyond that, it is not possible. So if it is open ended, I will withdraw my unit, I will take my money, and I will leave the mutual fund. One is close ended. If it is a close ended, then you are going to get the profit or loss only at the time of what? Only at the time of when it is going to finally mature. So I hope Vishwas Arya, your doubt is clear, NPV especially. Okay. So today it was 3 rupees and tomorrow it is going to be suppose 6 rupees. So values increase by 100%. So whatever the value is today, right? Whatever the value was yesterday's, no worries. What is the exact value today? That is going to be a matter, right? So in this way, mutual funds can be of many types. Why? Because mutual funds are supposed to invest. So there are some mutual funds who invest only in what? Those mutual funds, they are only going to invest in, suppose that, government securities. So if a mutual fund, they have announced ki no, we are going to invest only in the government securities, that means it's clear the money in the form of return or the interest rate which you are going to receive, it's going to be less, but definitely you are going to get pakka something, you are going to get in the form of profit rather than loss, because they are the government securities, right? So they are the government securities. So there are the mutual funds who invest only in the government securities. There are the mutual funds who invest only in what? Debt securities. And that debt securities may be of government or the private. There are the mutual fund, they say that ki no, we invest money only in the equity, and maybe that equity may be specific equity. For example, there are the mutual funds who do invest only in the shares of any infrastructure company. So infrastructure investment fund, right? Why? Because they are investing their money where? They are investing their money only in the infrastructure related companies. So on that basis, there is a huge possibility wherever you want, right? So actually, what we say unit, what we say this unit. So that unit, through this unit, we can purchase what? Means asset management company, whatever the amount they have fetched, that 1000 crore, this 1000 crore can be spent by this assets management company in government securities. Other option is what? Other option is bond, debentures, or they can go for equities. So there are the multiple option, right? So balance fund, for example, balance fund. So balance fund, what balance fund is going to do? Balance fund is, this is the amount of money, some amount they are going to invest in what? Equity, where there is a risk, and this amount they are going to spend in what? Government securities. When the risk factor is going too high, they will transfer this money from equity to debt. And when the market is progressing, they will start shifting this money from, means this is what the pool of fund. Right now, this amount of money is going to be invested in debt, and this amount of money is going to be invested in equities. Right. So right now market situation is fluctuating. So it is better to invest in debt. So they are going to increase their investment in the debt, and whatever they have invested in the equities, they will transfer this money from debt to equity. And when the market situation is going to be good, from debt they will start doing the investment in equities, and they call themselves as a balance fund. Systematic investments plan, SIPs. So how the SIPs are going to do? SIPs are also going to invest in such a manner. So SIP is another form of what? Mutual fund investments. So systematic investment plan. To some extent, we will invest only in the debt, and after that, whatever the money we are going to generate in the form of interest rate, we will invest in equities. So there are the multiple ways. What is the difference for paid courses, as everything is available here for free? Or please can you explain is why I should buy, or what extra you are going to provide here? No videos available? Things which are free provided by us is our discretion. Whenever we want, we will stop that providing free, and we will make it only paid for the paid students only. Right. And for paid students, I'm going to do many things which I'm not going to do for free student. So I hope this mutual fund system is clear. Now there are some few small definitions left. I will take image, like I have taken the image for from book, right? I will take the image from book and I will explain some small definitions. And in the next class, I will I will start with this part. I will start with this part, social structure in India, and we will proceed from here further. Like time value of money, etc. Generally, RBI do not ask. So for one question, means even if they are asked and if you are not able to solve it, don't need to worry for too much. Right? Generally, they do not ask numericals. SEBI did, but RBI didn't. Any other question, or should I wind up this session for today? Okay, then I'm winding up today's session. Tomorrow, first we will complete some few small definitions, and then we will start social structure, in India. Yes, yes. Sir, give some study plan for left days. Didn't get me. See, as I announced, I will try to complete because two classes were missed in between. But I will try to finish it by 15th of April. Maybe some 1 or 2 day will be taken more. So first I will cover this part, social structure part. Then I will go to this part, right? Banking system, which is left, risk management in the banking sector. All this part I will do. Development financial institutions in India. I will do this part. Then I will start revision and descriptive. So once the syllabus will be over, we will go for descriptive practice plus revision. Yes, yes, cycle. Any any economic activity by any national means if a Chinese national is in water of Bay of Bengal, right? He is in Bay of Bengal, and that portion of Bay of Bengal come as the under the category of international water. So if he is going to generate some income which is in the Bay of Bengal, and that part of the Bay of Bengal comes under the international water. What is international water? The water which is not claimed by any country's exclusive economic zone, right? So I told you that this is the land, and from here water started. So from land to 12 nautical miles, 12 nautical miles is what? Territorial water. And up to 200 nautical miles, up to 200 nautical miles, it is exclusive economic zone. Okay, suppose that there is another country and their exclusive economic zone is extended to this part. This is A, this is part B, this is C and D. So it is suppose India and it is Sri Lanka. So Sri Lanka's territorial water is here and this is their exclusive economic zone. So this part of the water, this part of the water is not being claimed by anyone. So this will be known as what? This area will be known as international water. And in this international water, anyone, whether he's Chinese, Indian, Sri Lankan, Pakistani, whosoever is going to generate income in this part, that is going to be the part of their country's GDP. So any income generated in the international water, that comes to that country's GDP only. Notes, no, see, those notes are kind of a reference material. That is kind of reference material. What I am taking here, I'm you can see that the the time which I have spent to explain you the mutual fund, right? That you can find in any good book or average book, hardly 4 to 5 pages. In hardly 4 to 5 pages, they have explained all things about mutual fund. But I took almost 2 hours to explain all these things, right? So there is a different reason for that. But yes, I do agree for the PDFs. I do agree for the PDF and PDF नोट्स में कुछ और ही चल रहा है नहीं ऐसा कुछ नहीं है नोट्स में कुछ और नहीं चल रहा है नोट्स में सप्लीमेंट्री चल रहा है यस पीडीएफ आई विल प्रोवाइड Generally, actually, what I do when I'll take this, for example, here in the online mode, it is very difficult to dictate. Generally, what I do at the same time, I do dictate also. But in this format, when I'm not able to see any of you, it is very difficult to dictate. So, any volunteer who can write, I will dictate. अच्छा, डिस्क्रिप्टिव आंसर राइटिंग करवा दूं. ओके. Descriptive answer writing. Yep, I told, just it is going to be finished. Once it is going to be finished, I'll start the descriptive answer writing. Let this part will be finished. Just told you na कि once this part will be over, this part and other part will be over somewhere around 17th or 18th April. We are going to start descriptive plus revision. Okay. करंट अफेयर्स का तो यार पनौती लगी हुई है. मीन्स इट्स काइंड ऑफ पनौती. वेन एवर आई विल गो फॉर इट, समथिंग हैपन at personal level or something will happen and I'm not able to take it. But I have to do it anyhow. I have to do it. So once this burden of completing the syllabus will be over, na, then I think then I can do it in the proper manner. Chalo then. Okay. Good night, everybody. See you tomorrow. Okay.